Good day. This is Chandran Thomas, President of Northern Trust Asset Management. I'd like to first begin by extending well wishes, prayers, and support for health and well-being to all the participants on the call. I have a unique privilege and opportunity just to share some brief introductory comments, a little bit about Northern Trust, our engagement with the organization, and then pave the way for what will be, for sure, a very engaging dialogue. For those who may not be as familiar, Northern Trust Asset Management is a global investment manager, and we've entrusted with managing over $1 trillion in investor assets. Now, that moves around pretty dramatically in the volatility that we see these days, but we're really proud of the opportunity we've had over time. You know, when I look at our range of investment capabilities across equities, fixed income, and alternative asset classes, again, a wide range of parts of the market that we touch and we're engaged in. One of the things that really distinguishes, I think, our business is our fiduciary heritage. When you think about who we are as an investment manager, we have our roots in being a discretionary asset manager. And so for many of the participants on this call who have that fiduciary responsibility and sit in the seat of managing assets on behalf of beneficiaries or advising them in that regard, from our perspective, given our heritage, we very much sit on that side of the table. And so whether it's capabilities like our quantitative research or our manager selection capability, the focus on sustainable investing, those are things that we think about that distinguish our products over a very long period of time. But when I think about Northern Trust, what I really want to share a little bit today is more about less what we do and more about who we are. And when I think about who we are, that's most characterized by what we believe, and that's captured in our mission. And so we consistently talk about a mission of enabling global investors like yourselves to achieve your most important goals. And we do that by providing investment insights, investment solutions, which we offer, and an exceptional client experience. We very much are a client-centric organization. And when I think about that, it's one of the reasons we're so strongly aligned with this trade association. Collectively, the members of this association oversee nearly $3 trillion in retirement funds and really are at the forefront of providing retirement security. I think about that in regards to the 7 million retirees that you collectively serve and twice as many active public servants. I can't think of that being more important than at a time like this, where I know all of us have an even deeper appreciation for the role our public servants play as they serve many times as the first and sometimes last defense in a pandemic like we face today. And this group has been long noted for being the voice of public pensions, but in my mind, it's also the voice of public servants. And we, in part, are able to honor them by serving all of you well. Beyond just thinking about, who we are in terms of our mission, we talk about our investment philosophy. And that's a philosophy that says that investors should be compensated for the risk they take in any market environment. Again, that's even more true today with some of the uncertainties that we face. But again, that disciplined approach that we encourage is important. It's important for ultimately helping our investors and our retirees achieve their long-term goals. And the way that we go about that is really focusing on 5 shared values. Those values are passion, competence, intellectual curiosity, diversity, but the most important of which is humility. And when we talk about our humility, it's really our focus on a shared mission and the needs of stakeholders like all of you all. It's that ability to put those interests above our own interests that really makes what we do really special in our eyes and really align, again, with the mission of all of you. The last thing I would note is that, there's a thought about personal belief. And when I think about, what I believe, as we've gone through this crisis, I've had an opportunity to speak to our partners in many different forums. And the thing that I've focused on the most is the belief in the power of people. There's an interconnectedness that we all share. It supersedes any measure of social distancing that we employ to protect our physical health. And like all of you, I've witnessed my colleagues, industry participants, and so many people just rise to this historic occasion in innumerable ways. And so it's because of that, I personally have a lot of optimism for the future. And that optimism is for our business, our industry, what we all participate in. But for me, it's more for humanity. And I think about this as being principally a healthcare and a humanitarian crisis. And so to see people respond not only with competence, but with deep compassion is really meaningful. And so it's that genuine curiosity that I have, love for the business, compassion for others, that leads to the great interest that I have and that I look forward to in hearing from two exceptional leaders, our moderator, Hank Kim, and our featured speaker, Marcie Frost, CEO of CalPERS, both who are outstanding industry spokespeople and leaders. And I couldn't think of two better people to address this body to provide some of their wisdom and perspectives at this unique time. So with that, I'll turn it over to Hank.
Thank you, Chandran. Thank you for that great introduction, and thank you to Northern Trust Asset Management for sponsoring today's webcast. So like many people on this webinar, and in fact around the world, I think all of us are adjusting to the new normal of stay-at-home orders. As such, we're all using our residential ISPs, and we're asking more of our online platforms. So please bear with us if we should have some technical difficulties, or if an errant dog, mine, for instance, decides to photobomb our webinar. As always, your patience and understanding is always appreciated. Towards that, I do understand that there are some folks who may not be able to hear us right now. So please, submit if you have audio issues and you've made sure that your computer isn't at fault. Please submit those requests again through the question portal on the dashboard of GoToMeetings. Marcie, great seeing you.
Nice to see you, Hank.
We have had a really big response to this webinar. So over 250 people have registered. And so I am really eager to begin our conversation about how you and the entire leadership at CalPERS is dealing with the current crisis, both the pandemic as well as the economic. As you know, we've talked about some topics we're going to discuss, but what I want to do is encourage our audience members to participate as well. So with such a large number, it's very hard to do it orally, but what we can ask folks to do is, again, using the GoToWebinar dashboard, there are question portals that you can submit. So throughout the session, we'll try to answer as many of those as possible. So, Marcie, thanks for your time, and let's kick it off. So, what is the current situation relative to COVID, California writ large, and then more specifically to you and CalPERS?
Great. Well, hello, everyone. And as Hank says, please be patient with us. My dog's already escaped once, so hopefully that won't happen again. But California, I think, relatively speaking, in comparison to, say, New York or Italy, the curve and the shelter in place or the stay-at-home orders have been pretty effective in California, where the caseload and that curve is really starting to flatten out a little. We believe that the spike in cases is likely to happen over the next few weeks. But I do believe that Governor Newsom has done just an amazing job of staying in front of the potential issues. You know, there certainly were a lack of testing, and that's something he feels personally responsible for. He's made a commitment to having more of the drive-through testing available here in California, and that it would be no more than 1 hour away for any resident in the state. So those will be happening over the next week. Very interested in trying to get more testing to see how many people have really developed the antibodies to it. And but relatively speaking, I think California is doing quite well. As far as CalPERS itself, we immediately stood up what we call our situation room or a mission control room and developed out the action plan. And the action plan was really important that we had really the right people on the team sitting, not really sitting at the table, but really being able to either webinar through or be able to teleconference in. And so our executive team, one of the things that we had put in place a few years ago was we do daily huddles as our entire executive team. 8:30 to 9 o'clock every morning, the entire executive team is meeting on the issues of the day. So having that structure in place already was just so critical, and I think has been one of the successful components of this. But what we did find is that we had a few missing voices as we were creating our action plan. And those missing voices were really around, we needed our human resources person in. We had a brand new HR director. Her first day was the first day of the mission control room. So she's been on the job learning. She obviously had a very strong HR background when we hired her, but her experience with CalPERS has all been COVID-19 related, and she's doing just amazing work there. We also needed to bring in the voice of our facilities, which manages all of our security, manages the procurements, manages our mailroom and imaging operations, because in order for the people who are remote working to be able to be productive, they actually have to have work in the workflow. So having people arrive on site, we're not able to assign everyone into remote work or telework. We have about 300 people out of our 2,800 who have to actually come physically to the headquarters building in Sacramento to do their essential work. But this team met every single day, and really the idea was we want to keep productivity levels to their pre-COVID-19 levels to the extent possible through remote working. So of course we had significant reliance on our IT team. We had significant reliance on the business continuity plan that had already been put in place. And I know several other organizations have business continuity plans that likely you've had to dust off the shelf like we did and really find the relevant points. And when we didn't have the relevant information, we had to go quickly and capture that and put that into our decision-making processes. But having that continuity plan, having an emergency operations center, which we do have. And I think one of the early successes that we had is the investment office, a couple of weeks in advance of this, had been watching this virus as it made its way through China in particular, and had already begun its business continuity work, had already tested out all of their core processes, including the trade desk, had tested those out either through the Emergency Operations Center or through people's homes. And so they were ready to go day one. 100% of the investment office, over 300 people, day one were working remotely, managing that portfolio and managing the decision-making processes. So even though we're a long-term investor, and I know I have an investment slide, but even though we're a long-term investor, there were certain decisions around liquidity, for example, or opportunities in the market that we wanted to take full advantage of. The other thing that we needed to make sure of on the mission control room, if you will, is that we stayed aligned with the federal, the state, and local guidelines. And so some of the early feedback that I got from the team was, why didn't we close down our regional location sooner? Why didn't we close down the headquarters building sooner? And really what we were doing at the time, and when it first started in California, we had county by county doing the shelter in place. And then finally, not finally, but then Governor Newsom decided he was going to do shelter in place for the entire state. So we tried to stay aligned, tried to keep our decisions fitting what the advice was from the county levels and then ultimately from the state level. And then the other thing that was really important, because in a crisis, in a pandemic or COVID-19 or any other crisis related, communication becomes extremely important. When there is a gap in information, a gap in how you're communicating with people, that gap tends to get filled with really negative and mostly non-factual information. So we stood up a very active communication plan, which I'll talk about as well. But again, the overall goal was to maintain our productivity levels so that there would be no dramatic impact to the services that we were providing to our members, to our employers, and to our almost 2,800 team members.
So next, Marcie. Yeah, so Marcie, you touched upon it, curious, and I'm sure the audience member are as well. Tell us a little bit more about your communication strategy to internally, CalPERS Enterprise, to the plan sponsors, to the participants.
Great. And David, if you could go to the next slide. So I mentioned a bit about just making sure that we were well informed on what was happening with the state and local officials. We are a state department, so we need to stay aligned with the governor's office and the centralized human resources department. And the other thing that we have, because we are the second largest purchaser of healthcare beyond the federal government, we actually have a chief medical officer on our team, and we added her, Dr. Logan, to the mission control room. So we were able to get a lot of really critical information about what's happening with the virus itself and what we could determine around community spread and how that might impact mail delivery, how might that impact someone's ability to come into work. So we, first of all, our team really had to think about what is our role in a crisis and what is our role for, just routinely working in an organization with the complexity that we have. And, we've been working on culture for quite some time at CalPERS, and we really defined the role of the leader as making sure that the team can be successful. Your primary responsibility is the success of your team. Your team's responsibility is really the success of the member. So immediately we went into daily email updates to all employees, and those were intended to answer the questions that were either coming directly to me, questions that were coming to Dr. Logan, questions that were coming to any member of the executive team. And we just started doing daily updates out to the 2,800 employees. And I think, immediately people felt like we would tell them the information that was not so rosy, as well as the information that, our responsibility is to look ahead 30 days, 60 days, and 90 days, and plan out the what-if scenarios. So we started doing that within the first week of our remote working. And then we also added Friday, what I call a Friday web chat. And that's an opportunity for me to talk with the entire organization, and we give them a couple of opportunities to be able to get their questions in. They can do that in advance, or I will take live questions through email, and I'll respond to those directly through the web chat itself. And I think, for the most part, people feel like we're being transparent. We obviously care about our team. We can't do our mission, paying $24 billion in benefits. That $24 billion is critically important to the members who are retired, but as well as the communities in which they live, because they're out spending those pension dollars to support local tax base and be able to provide for their families. So it was very important that we could continue to fulfill our mission, and that we had a team that felt like the leadership was watching out for their safety, that understood the new burdens of trying to balance this. I need to remote work, I've got these professional responsibilities, but then I have to homeschool my children because all of the California schools are now closed through the remainder of the school year. So how do we balance that for our team? One of the things that we did right away, I'm not a big micromanager by style anyway, but we communicated very clearly to the team that we will be as flexible as possible, that the overall goal was to get the output and the productivity and the production so that our members could really be served. And just because you normally work an 8 to 5 workday, we're not expecting that you have to work an 8 to 5 workday. We know you have new responsibilities in your home. So we just said we're going to be as flexible as we can, work with your team leader. And I think our production numbers are above 90%, which is the goal, to keep all of our production within green. So the team is doing exceptionally well. I couldn't be more proud of the group and how they're responding to this. The other thing we did is we started listening to our contact center. So we have, a contact center here in Sacramento in the headquarters. And for the most part, we have about 65% of the contact center who's able to work remotely, and then we have about 35% who are on site. One of the things you need to do right away, and what we did, is we identified what the key questions or the general questions coming in beyond what a member wants to know about an estimate or can I retire, but what is it generally that members are asking and feeling like they need to call the contact center because they can't find that information anywhere. So we gathered all of those frequently asked questions, and we did an email blast out to 1.2 of the 1.9 million members that we have. And we put out the frequently asked questions. And of course, the number one question was, am I going to receive my March benefit, my April benefit, and my May benefit? So we captured those questions. It brought the call volumes down a bit. And I think we also sent it out to our stakeholder distribution list. We have email addresses for all of our key stakeholders. And we had about a 60% open rate on that email that went out to 1.2 million members. And so, generally speaking, or what you would see in an industry standard, that's probably triple the normal open rate. So it shows the appetite that people have right now for information. And being the source of that information, being that reliable source, is really important. They need to hear it from their retirement administrator. Otherwise, they're going to go out on social media, and who knows what they might hear that would be different than what we would say. Now, the other one that we're doing tomorrow around communications, we have about 3,000 participating employers, and you can imagine that the employers are getting quite concerned about their contribution rates, but also what happens with the fiscal year-end return and what might that do to their ongoing contribution rates. But I think the critical question right now is, with the tax base being reduced as significantly as it has been, what kind of options do you have, CalPERS, to help me? Do you have any kind of ability to provide some relief? So we're hosting an employer webinar. As of yesterday, we had 1,500 employers. Those are not unique employers. There could be multiple registrations for one employer, but we had over 1,500, and we expect that number to go up probably to a couple thousand employers who will be on a webinar with our Chief Financial Officer, one of our Deputy Chief Investment Officer, our Chief Actuary, and then I will facilitate, a couple of slides as well. But it's really important to get the subject matter experts in contact, and having those employers be able to ask us questions directly, them to be able to see us respond to those questions. I think that transparency is really important right now as well. And then keeping the board informed. I've a very active board. I have a 13-member board. And what we did, I normally have several conversations with board members throughout the week. I do some one-on-ones with the chairs of the various committees and the board president. But what I also did is I stood up a daily contact with the president of the board, the vice president of the board, and the chair of the investment committee. And we talk daily about what's happening on the operations side. We talk daily about, if there's anything on the portfolio side. We talk about any policy exceptions that may be happening just because asset allocations and policy targets could become out of range, and we have a requirement to notify the board if we've had to do anything in that manner. And so those calls, I think, have been really helpful to keep the board informed. Obviously, they're getting some questions from members, from employers, from various other stakeholders, and just making sure you have consistent information out there. That the same question that's being asked to a board member or to a member of the management, it's getting the same answer. And then communicating with the stakeholders. We know what the stakeholders are concerned about. It's a variety of reasons. One is around the defined benefit structure itself. Some of it's around, will my pension be paid? What are we looking at in terms of the investment portfolio right now? So we put together a very comprehensive communication plan, daily communication out to the employees and the team, weekly communication to the members, to the stakeholders, occasionally with the employers. I think this webinar tomorrow, we likely have to do one again in June, and then daily updates with board leadership.
That's great, Marcie. It sounds very comprehensive. So let me switch to some of the questions that we're getting. The first question is, some conservative pension critics already are assailing CalPERS, describing the situation with unfunded liabilities as a, quote, ticking time bomb, close quote, that is now exploding because the downturn in the market. Is that a fair criticism, or is picking a point in time of decline not telling the financial health of CalPERS?
Right. Yeah, it's, CalPERS gets covered in the media quite frequently. I'm sure many of the listeners or the participants in this webinar have seen coverage in the past on us. So I do think that there are some opportunistic coverage out there of public pension plans. Certainly within the last couple of weeks, we've seen a spike in those. And I don't think it's a fair representation of what the public pension plans across the United States in particular are doing, really to manage the liabilities, to manage the assets. Retirement security is a real issue. Retirement security in a DC plan, my personal belief, that can't happen. Just take a look at if you have a DC plan or a 401k or a 457 plan today, going in and looking at your account balances and trying to retire from that is going to be pretty difficult and complicated. So defined benefit structures have a really important, safety net responsibility for public sector workers. And again, most of these public sector workers are bringing home $30,000 a year on average. And so no one's, making a lot of wealth here. And so, yeah, I think there are opportunities to really attack these systems at the wrong time, and it's not a fair representation of actually what's happening where, I don't particularly like the word reforms, but changes are really happening within every single pension plan, including CalPERS, about how to make these funds sustainable. And again, one of those strategies that we looked at is we did understand that the markets were going to correct, again, not to the extent that they have, but we started implementing investment strategies. We started looking at our liquidity, really managing liquidity differently in the portfolio. I think it's something we all learned in the 08-09 downturn, is that liquidity became a real problem quickly. And so we don't have a liquidity problem today, and we're hoping that that continues, but obviously that's dependent upon the duration of this particular pandemic and how the markets continue to respond to it. But yeah, it's pretty opportunistic in my view.
And I know we're going to be talking about investments, and so this might be a good segue towards that. So we got a question saying, with the large investment losses, is CalPERS planning to adjust the discount rate going forward?
Right. Yeah, so that is a question, obviously that we continue to get. We get it from a number of policymakers, and we do have a process called our Asset Liability Management, the ALM, and we start that process in July, and that's just its normal schedule. We're not pushing up the schedule in any way, but starting in July at the board offsite, we'll start working the board through asset allocation. We'll start looking at the 4-year experience of the plan to see how the actual assumptions really played out around mortality, around inflation, around new entrants, and then obviously around the discount rate. We did lower the discount rate in 2016 from 7.5 down to 7. That certainly helped with having sufficient liquidity coming into this particular market. We also changed our amortization policy on the unfunded liability side from a 30-year amortization down to 20-year, and that's bringing new contributions in. And we have a hardship process that we brought in at the same time for certain employers who may be experiencing some hardship. We're likely to hear in our employer webinar that people are going to want to go back to a 30-year amortization, but we are very careful about that. That does not really fit within the professional judgment of our actuary. And so we'll be very careful about how we analyze a return to that amortization period. But it isn't out of the realm of possibility that we will have to look at lowering the discount rate again. But a lot of that depends also on the 10-year capital market assumptions that come through the board's work with the investment office and management around asset allocation. And so once an asset allocation is determined, then we figure out what the capital market assumptions are for the next 10 years, and then the actuaries will determine the 30-year actuarial return, and then somewhere in the middle will define the range of which the actuary would recommend for the discount rate. That is likely a decision, I think that is set up for November of this year, where that decision would be made.
Okay. So, talking about investments, obviously CalPERS, along with all of our public plans, are long-term investors. But we can't be blind to the fact that there are daily swings in the market, right? I mean, more than full percentage points, wild swings. So how are you and how is your investment staff handling sort of this turmoil in the market?
Yeah. So one of the things that we did in our investment office after hiring a new chief investment officer, I hired Ben Meng just over, I guess it's been about 18 months now. And one of the first organizational development pieces and portfolio construction pieces that he put in place was around getting the entire team to be focused on total fund and to put a better top-down governance structure in place. We had a lot of bottom-up ideas and opportunities, but they weren't really fitting into this total fund strategy with the appropriate governance and oversight of those strategies. And so Ben was able to get that in place very quickly. So how decisions are made in the investment office today, very different than how decisions were made in the investment office 18 months to 2 years ago. And that has been a strength at this time where people are remote working, but there's no confusion about where the decision is made. And so that's a key piece of the COVID-19 response. But you're right, we're very long-term investors. We're patient capital for the most part. We don't have this need to, other than our liquidity responsibilities around cash flow, we can stay focused on the long term and find opportunities to exploit in these markets because of the volatility. Obviously there are going to be strategies that we could implement during these times that would not be able to be implemented when valuations are much higher. We did implement, from a timing standpoint, I think this worked really well for the portfolio. We were able to get some of our low volatility strategies in, which really helps to cushion some of the bottom of the volatility. I think that has worked really well. And then the decisions around having a liquidity management dashboard so that we're holding on to the liquidity that's sufficient to pay the benefits, but that every other dollar is being used for those potential opportunities where we can get a return in the long run. But we know that, most of this is we have to survive the short term. We were about 73% funded coming into this downturn. We're certainly not there today. I don't have the final number, but it's probably dropped by at least 10 percentage points. And so, a fund that is not as healthy as we would like it to be, those opportunities around risk and what we can exploit, are not as as sufficient potentially as a fund that is 100% funded prior to coming in. But I think the fact that we're managing liquidity so well, we grab certain liquidity pockets out of the markets when we needed to. And I think one of the risks that we're really monitoring right now, which is why we have to keep our employer partners so close to us, is that we're making an assumption that our employer partners, the 3,000 participating employers, are going to be able to make their contributions. So right now, the delta between where we're negative cash flow, if you will, is about $5 billion of the $24 billion that we're paying in benefits. So we're actively monitoring both the contribution rates, the contributions coming in, as well as the liquidity overall to make sure, again, that we can take advantage of opportunities when they present themselves.
Marcie, so relative to employers' ability to make their contributions, have CalPERS or have the plan sponsors looked at the recently passed rescue package, the third rescue package, the CARES Act, to see if there's any ability for the federal government to assist in states and localities making their contributions?
Yeah, I think that we've certainly started to look more deeply into what those other channels might be. Obviously, most of the pension plans have partners for lending as well. We have, a custody bank. If we ever got to a liquidity crunch, where we weren't able to make the pension payroll without selling assets, I think there's, a federal window that, we're looking at what the process might be. It's not that we're going to take advantage of that, but I think at this point in time, you look at every single opportunity that's available to you to make sure that you have sufficient liquidity when you need it. And again, it's not only for paying benefits, but it's also for taking advantage of, the market structure. The volatility does present opportunities. And I know many of the investment offices in public pension plans are doing the exact same thing that CalPERS is doing. But, I'm careful about talking completely about our strategy, but I'm sure every public pension plan is looking at it in a similar way that CalPERS is. But yes, we have to look at every window, every channel, that if the duration of this thing continues and we start to see liquidity really coming into a crunch time, we need options.
Yeah. So so we'll be publishing our monthly monitor, which is our legislative newsletter. And in it, I believe we have an article that talks about one section of the CARES Act. I think it's section 4003, where it really talks about the $454 billion that Congress appropriated and sent over to the Federal Reserve, and through their money printing magic, they'll convert that to $4 trillion to help small businesses, states, and localities. Treasury and the Fed will still need to write regulations relative to that, but at least the way we read the text of that section, there's nothing to limit states and localities when they apply for this loan to include contributions to pension plans. So, a lot to be seen, but again, as we currently read it, that we think that's a possibility.
Yeah, we've read it. We're waiting for the regulations, as you indicate, to make sure that it will be available for public pension plans for participating employers contributing into a public pension plan, and hoping, not just hoping, but I think putting our voice into the importance of inclusion.
Yeah. So, Marcie, we got another question from the audience. Have you had any COVID cases on staff? If so, has it impacted any of your essential functions? And if it has, how have you and CalPERS team dealt with it?
Right. We have not had any confirmed positive cases, but early on March 16th, we actually were the first State Department to shut down all of our operations. We had an individual who had presented COVID-19 symptoms while working in a very populated work area. And based on that individual's account of where they had traveled, we quickly assumed that it's likely that this individual could be tested positive or would test positive for COVID-19. So we shut down CalPERS on March 16th, and we brought in a cleaning team to go and disinfect and sanitize every single surface and overly emphasize the area of which this individual was working. Fortunately, 2 weeks later, it took some time to get the test result back, which I think has been one of the really frustrating parts, not just for us, but for many, is trying to, one, get access to a test, and then once you're tested, waiting, 7 to 10 to 14 days to get a test result back has been, that's been difficult. And so this individual, it took almost 2 weeks to get a test result back, but it came back negative. So at this point in time, we've been tracking about 5 individuals who, through their medical physician, have indicated that they're symptomatic, and all 5 of those cases to this point have come back negative. So we feel very fortunate about that. The cases in Sacramento are not significant. We've got a relatively very flat curve. And so there's a couple hot spots, but we know the source of why that occurred also. So we feel really good that that's not happened. But, there is anxiety within the workplace about people who cannot telework, cannot do their essential work in a remote manner because they're opening mail in the mailroom. They're scanning and imaging the documents so that they enter the workflow so people who are remote working can actually get their work done. There's just some people who can't do their work from home. And so those are the individuals we continue to focus on. We provided free parking into the garage. There's a big wait list in our garage, and we just said, just come park in the garage. Don't worry about it. We also do extra emphasized cleaning in those areas throughout the day. We've kept our entire cleaning crew on. We've kept our entire security crew on. And, I think people, again, they've been really patient. I tend to be a calm person anyway. But I think that demeanor by the leadership is really important, that you're demonstrating that when you're talking with individuals, that there is a plan, that you're optimistic about the future, but that you're steeped in reality and what people's fear and what people's anxiety really is, and addressing those needs very directly. So if someone says, I feel like this hasn't been cleaned well enough, we get a cleaning crew over there right away. Or if someone says, I don't have the equipment I need at home to be productive, I need my keyboard or I need my mouse, we arrange some time for the individual to come in and pick up some equipment so that they can feel more productive at home. But our IT team has just been amazing to work with. We didn't have all of the necessary equipment that we needed to have 2,500 people working remotely, but they moved through over a 2-week period of time and deployed over 2,000 pieces of equipment and VPN, remote access key fobs, or fobs, if you will, to be able to have people come into the network. And what we've been not pleasantly surprised, but just reassured by, is that we have a very strong network team, we have a very strong IT team who, as these VPN sessions come into the network, we have over 2,000 simultaneous users remotely coming in, and the network is performing really well. So that's, another positive that's really come out of this, is that you don't often get to test your business continuity plan. And, we're in full test mode, and for the most part, all of the test results have been extremely positive.
Great. Another question from the audience is, how has COVID-19 affected your board meetings? Are you allowed to meet remotely? And if not, what are your options?
Yeah, thank you. So we did hold a very short, very brief board meeting in March. We did it completely via teleconference. And we have these administrative decisions that the board has to act upon timely. Otherwise, the administrative law judge decision stands. And so these timely decisions had to be made. And so we had a very, about a 30-minute board meeting, completely via teleconference, not ideal, but completely via teleconference in March. But what we're doing in April, we have 3 days of board meetings in April. They're scheduled for April 20, 21, and 22. And that meeting, the committee meetings, as well as the full board meeting itself, will be done via a webinar, via video. So each of the board members will remote in from wherever they are in their homes or some other remote location. They will come into that committee meeting, come into that board meeting. All of the presenters will also be a part of that web event. And then for public comment gets obviously a little more difficult. But we're just noticing the board meeting today and the committee meetings today. But what we're telling the public, we get a number of public commenters at CalPERS, and so we're giving them 2 options. Option 1 is that they can provide their written comments that would take no longer than 3 minutes. We have a 3-minute time frame requirement for public commenters. So give us your written feedback or your written comments, and we would read them into the meeting record. So that's one option that they have, and they can send that to a mailbox, our board services unit. And then option 2, because our auditorium in the headquarters building is fairly large, that's where we get most of our public commenters anyways, coming into the headquarters building, that they would be appropriately socially distanced. We would have a protocol in place for them to go up to essentially this laptop, be able to provide their 3 minutes of public comment, and then exit the auditorium. That laptop would be cleaned and sanitized, and then the next public commenter could come forward. So we're going to test that out. We'll see how it works. But again, that's April 20th through the 22nd.
So let's shift gears just a little bit. Oh, I'm sorry. Did you have a further?
No, go ahead.
Shifting gears just a little bit, talking about healthcare. You referenced it in your beginning. So I know CalPERS administers health plan for about 1.5 million Californians. What are the challenges? What are the solutions you're seeing on that side of the house?
Right. I think that the health plans, at least everything that, and we're staying obviously close contact with all of the plans in the lineup. They are certainly watching their experience and their caseload as well. We're right in the middle of rate development, which is obviously another complication for us as these health plans are trying to figure out what would the impact of COVID-19 really be, and how do they, submit an appropriate rate ongoing. But one of the things we wanted to make sure is that we had members continuing to be able to access their health care. And we upped the telemedicine opportunities for more general appointments or check-ins. All of the non-required or the elective surgeries obviously were canceled. But we right away required the health plans to provide free COVID-19 testing. And I think that made our members feel that the system was really watching out for their needs. But we didn't feel like there should be a cost associated with the testing for this particular virus. And then staying in close contact with our pharmacy benefit manager, which is OptumRx, because people were concerned about medication shortfalls, that the pipeline of supply chain was going to be disrupted in some way, really encouraging individuals to take the 90-day mail order option rather than having to go into their local pharmacy to pick up medications. But I would say overall, the health plans, our pharmacy benefit manager, and the members continue to be pretty well served. One of the issues around this elective surgery, we're getting some questions, I'm paying these particular health rates right now, yet I don't have access to these elective surgeries. Will there be some adjustment to my rates because, the experience of the plan should be less as it relates to, other conditions other than COVID-19. Now, we don't think that's not what we're going to see in the rate development cycle. It's not what we're going to see in the experience of the plans, but we have an obligation to get those done, get that negotiation done in June, and then be able to announce the rates for 2021. So yeah, this is quite disruptive to that process, and there's a lot of fear and anxiety that these rates are going to go up by 10, 20%. And, I can't really talk about, what we're seeing in those early submissions, but we're actively negotiating health rates for, as you indicate, 1.5 million members here in California.
Great. Marcie, going back to the board, got a question relative to what platform you're using regarding voting during the virtual board meetings. Is it proprietary? Is it something off the shelf? Can you expand on that a little bit?
Yeah, so we're using WebEx, and when you have the professional version of WebEx, you can actually host these webinars, very similar, I think, to what we're doing today. But all of the votes from the committee and from the full board will have to be roll call votes. So we'll have to call each board member by name and have them express, their A or nay on that particular item. So it's the only way we'll be able to do it in this more remote setup.
Okay. And there are a number of questions relative to the investment side. Obviously, it accounts for nearly 70% of every, or 70 cents of every dollar that goes out. So I'm going to try to summarize it. So in a sense, to what degree are you analyzing how coronavirus is going to impact the opportunity to invest in the overall economy of the world economy going forward? And as you make those, you do those analyses, is it going to impact how you are doing your current portfolio makeup?
Okay. So our global, so the way that we allocate across the various asset classes, so over half of what was the $400 billion portfolio is invested in global equity, but that is primarily like 98% passive investing. So we just own, the market, if you will. So, and the markets are pretty good about pricing in. So I don't think we have any plans, at least at this point, unless we have conviction in a particular active manager and a mandate that they come and speak to us directly about. But we're predominantly passive on the global equity side. Where there are some opportunities, obviously, will be on the private equity side. We're not seeing a lot of capital calls at this point, but we're staying in close contact with our core set of GPs about what they're thinking about in terms of opportunities, and buying at a time that the market is lower will certainly help us in the long term. Again, not much relief in the short term. But I think there are a couple of things that we're watching for. We just had our chief economist give us a kind of a macro micro update on Friday, had him talk to the entire executive team. And that was really more about scenario analysis about recession, and do we see this as kind of a V recession, a U recession, an L recession? And I think our best guess at this point is that hopefully after Labor Day into the fall that we'll see the markets begin to correct more. But commercial real estate, that isn't coming out of the investment office. That's a question that I have about now that many of these organizations have tested the remote access or remote workforce, and you have these brick and mortar costs. To what extent is that going to impact commercial real estate into the future? That's something I would certainly be wanting our team to watch for. But again, most of our global equity is passive, and as you know, the markets are pretty efficient and will price in appropriately.
And then another question more on the benefits side, particularly during a downturn and a crisis like now, how important are the contribution or the benefits that CalPERS and other public plans distribute to the participants in terms of stabilizing their communities, particularly rural communities, and the overall economy?
Right. It's, I mentioned it earlier, and I really do believe this, is these defined benefit plans are really the social safety net. And some of the recipients of public pensions don't even have access to Social Security. We certainly have some of that in the state. That's more on the CalSTRS side than it is on the CalPERS side, but we do have some public safety that doesn't have access to Social Security. So what they're trying to rely on is their employer pension plan, their defined benefit pension plan, and then whatever personal savings they're able to accumulate throughout their career. So I came, my own personal story is, I grew up in, very humble beginnings. I spent a lot of time with my grandparents. My grandparents didn't have access to a defined benefit plan, and they ran out of money pretty quickly. It only took one medical event to wipe out their personal savings, and then they attempted to live on Social Security, and those are just not, viable options typically for people. Social Security, was not intended to, support at a certain level, for 20, 25, 30 years post-retirement. So I'm a very strong advocate. I often get called the true believer of these pension plans. I'm okay with that. But I will do what I can to protect them. They are so important. As I mentioned, $24 billion. And for the most part, that is being spent here in the state of California. Obviously, some of the retirees move on to other states to be closer to family. But I think it's over 85% of the 24 billion is being spent here in the state of California, and that's very much an economic stimulus. Imagine if that wasn't available for spending, and what happens if these pensioners don't have access to that kind of cash flow into their retirement? They're relying on other social safety nets that are not pre-funded, and these pension plans are pre-funded to the extent possible. Now, it's not that everything's perfect. We have an unfunded liability that we were trying to get in front of and get taken care of, and this particular event happened, but I do believe this is a pause. It's not forever, it's a pause, and I'm very optimistic about what will happen over the course of the next 6 months, 1 year, 2 years. But when you came into the system underfunded, or you came into this downturn underfunded, it adds complications, and those complications have to be managed, but you don't manage them on the backs of these individuals who had very long public service careers, on average about $30,000 a year. I don't know how they're living in the state of California on $30,000 a year. Obviously, they were able to accumulate some personal savings along with that. But you don't balance this on their backs. We figure it out. We're the adults in charge. We will figure this out. And it's going to be a combination of, I don't know that, investing your way out of it is something that you could do if you're not a well-funded system. You can't always rely on the employers to up their contributions, and then you've got the benefit design. So those three things have to work in harmony, and that's what we've been trying to do over the last 2 to 3 years.
So just for the audience, we have about 7 minutes left, and I know there are still a number of questions. We're going to try to work through as many of them as possible. So another question, Marcie, is how are you handling instances of members either dying or being disabled due to COVID? And relative to that, how are you handling any death or disability benefits relative to COVID?
Unfortunately, I think the number in our daily huddle, there are a number of operational details that are shared, and those operational details are now being placed into a dashboard, an online dashboard, where we can access updated numbers on a daily basis. But certainly one of the indicators that we're looking for are the number of deaths related to COVID-19. We're also looking at a 16% increase as of yesterday in the number of estimates coming in. And then we're also looking to see what's that going to do to the assumptions that we have around retirement. But unfortunately, we've had at least 5 of our members who have passed due to COVID-19 complications. And, we have a team who is able to work remotely on those processes. It's a very empathetic team. They go through extra training, extra filtering and screening to be a part of that team. And it's a tough time. But most of it, right now we only have the 5 where we have confirmed COVID-19 death-related benefits being processed. But at this point, we're not seeing any increase in the number of disability benefits, but are seeing increases in estimates, which we think will lead into an increase in retirements. And so we're getting a lot of questions also right now about early retirement options, whether it's called the golden handshake here in California, whether we would be looking at any avenues that would offer a golden handshake exit for some of the members who are closer to retirement. That's a very expensive prospect. It's not that we would say, completely no, but it's something we have to really think about. And increasing the liabilities at this time may not be the best answer.
Right. Next question is, are you aware of the state, counties, or municipalities considering freezing employer contributions due to the short-term budgetary impacts?
So we're not hearing that directly, but we have maintained very close contact with our employer community. I think one of the things I found when I first came into the system is that we didn't have enough interaction with the payers of the system, if you will. Like, members make contributions also, obviously, but the employers are making the normal cost contributions, but they're also, for the most part, paying the full unfunded liability freight. There's not really a risk share there. And so we're not hearing that as directly, but I know we will hear that tomorrow on the webinar itself, where employers are very concerned about their ability to continue contributions at their current rates, let alone whatever the fiscal year return might be that would factor in 2 years from now into ongoing rates. But I'm sure we're going to get a lot of questions on that. And we don't have a lot of flexibility. I mean, we have some flexibility in not charging penalties around late reporting. We have this extended amortization that we can offer them on their unfunded liability payment side. But we're going to take every opportunity and hopefully put some pressure on the federal government, as Hank said, and we'll need Hank's help on this. And Hank is just a very strong advocate for public pension plans. He's very well respected in this space. His voice is heard as well. And so having several of the public pension plans, having these associations really say, don't leave local municipalities out of the stimulus package, and offer them opportunities to help pay their contributions into public pension systems. So that's what we would tend to pivot or divert the attention away, and hopefully find revenue sources versus cutting off pension payments.
Marcie, has COVID-19 impacted your sustainable investment program at all?
So it hasn't, but about a year ago, we did restructure that program to some extent because there has been additional focus on how do you get a 7% return. We certainly need to understand the risks in all markets, not just private equity, but global equity, real estate. We need to understand the risks that we might be taking on, because we need to be rewarded for those risks, obviously, and there are significant risks related to environmental and social and governance. So we divided the organization a little bit differently than what we had in the past. So right now, we have a policy and advocacy group that now reports into my office, that is led by Ann Simpson. And this is where we're engaging with the federal government, with the SEC, with PRI, with a number of institutions, really thinking about, if we're a long-term investor, we have to think about long-term risks, but we're not really seeing as many opportunities on the investment side to integrate it into the portfolio to get that 7% return. But governance is critically important. We know that boards who pay attention to diversity, who pay attention to executive compensation, pay attention to the things that matter to us, we know that those companies tend to perform better. So we are very active on the governance side. On the environmental and social side, it's really around being longer term. What are the risks if companies are not participating and really thinking about environmental impacts if you're a fossil fuel company. We were one of the originators of Climate Action 100, and that's an engagement and an advocacy program channel for us, and we're very active there, as well as many other institutional investors around the world. And then on the social pieces, that's something we're continuing to monitor. We've got in the investment office, still in the investment office, we have our proxy, how we engage with companies, either via proxy or direct engagements. That's happening in the investment office. And then we have the quantitative research side about where are the opportunities where we could actually integrate ESG investment options into one of the asset classes. And that's being led in the investment office and very steeped into research and quantitative analysis. So it's a three-pronged approach that we're doing right now, just because there are not as many investment opportunities that give us the 7% return.
Marcie, the question going back to healthcare. The questioner is asking this relative to to what degree can CalPERS help ensure that its members get access to emergency services when they need it, for instance, ventilators, and if if you can't, are there any discounts available relative, I guess, to the premium?
Yeah. Yeah, there's, we don't have, we're a purchaser of healthcare. We certainly have very strong relationships with all of the plans. If we talk to the plans about something that is a priority or something that's very important to us, and access, quality, and affordability are the three things that we engage very frequently with our health plans on. Ventilators, I don't know if you saw it, Governor Newsom just sent 500 ventilators to the federal government for deployment out to the states. And, I think we have from time to time gotten direct calls from members who believe that they're not experiencing the type of service or access to service that they should be getting, depending on whatever condition, whether it's an emergent condition or whether it's a chronic condition of some kind. And directly with the health plans to make sure that those members are being served appropriately. We don't get in and tell them completely how to do their business, but we make sure that our members have access. The affordability is going to be pushed a little bit probably, but the access and the quality are critically important. And if we hear from a member, or we hear, and sometimes we hear through our board or through an association, that the pipeline is not adequate to serve the members, then we jump in pretty quickly and engage with those plans and put in corrective measures.
Thank you. So last question, what are sort of the lessons learned or things that you've discovered through this process that other plans could learn from, or other members?
Well, I think it goes back to communication is absolutely key. And I think we were maybe a week delayed in getting some information out to our 1.2 million email addresses that we have on hand. We were using our social media channels, but not all of our retirees, not all of our active members are, say, out on Twitter or out on Facebook. But to have a 60% open rate on an email blast that we sent out was really good. And so we'll plan on, as new information comes in, before they can actually ask for it, the whole idea is to be proactive, anticipate the questions, and get those out there before they make that call to the contact center or before they get concerned about something that they shouldn't be concerned about. The other thing we did is, staying aligned with state and local guidance. We didn't want to get ahead of the other state departments. I think, we always were thinking a day or two ahead and implementing just in front of some of the guidance. We felt really good about that. And the reason we were able to do is we had Dr. Logan on our team, and she could really anticipate where the guidance was going to go next. And so we were able to implement that guidance a little sooner. And I think that made our employees feel like we were on this, we were paying attention to it, and we really cared about them. Update your information regularly. Don't let it get stale. Even if you don't have anything to report, it's better to tell your employees there's no new report today. If you don't tell them that, they'll assume something is wrong. And so I think just that frequent, constant communication, because I think what you know is as soon as someone finds out that you're an employee of CalPERS, you get inundated with questions about what's going on with my benefit, what's going on, at CalPERS, what should I be concerned about? So arm your employees with the information that they need so they can successfully answer those questions. Use all of your communication channels. I think you have to communicate 6 or 7 ways through 6 or 7 different channels, and some people prefer social media. Some people prefer having an email sent directly into their inbox. Whatever works for your members, or use all channels, because not one channel works for all. Stay empathetic. I mean, you have to demonstrate that you really do care about your team, and obviously we do care about our team. You can't be successful without your team, but you have to empathize with these new challenges that they have in their homes, where they're trying to do work, they're trying to take care of their children, and they're trying to homeschool, they become teachers. And so empathize, stay focused and positive about the future. Stay calm in the manner in which you interact with everyone. Keep your members as the focus. Sometimes we can get a little worried about ourselves, and I think what we found is that if you get people to think about the reason CalPERS exists is to serve the members, to be able to pay the benefits, and to provide a level of service to active members as well. And so if you keep the members as the focus and management stays flexible in how the team provides those services, it works really well. And again, our production numbers, I think, are very reflective of that success. And then support your team, make them feel safe, make them feel like you're going to tell them the bad news as well as the good news, and do that as frequently as you possibly can. The emails are working, but what I've heard from the team, and I get a number of people who send me emails, is that the web chats really work, and then taking those live questions, because it feels authentic, it feels genuine. They're not questions that you got in advance, that you had time to think about the answers, that keep that as transactional as you possibly can. And then on the business continuity plan for us, I think what a lesson learned is that we had assumed in many of the scenarios around the continuity plan was that the buildings were not going to be available. But we also didn't make an assumption about what about key personnel not being available. And many of our workers are what I call knowledge workers. And so what if you run out of knowledge workers? How are you training a new labor pool to come in and tag team someone who may be out ill, may need to take care of a family member, or may need to take care of their children, or things that we really did not anticipate as well in the continuity plan, of which now we have this great experience and the plans will be updated accordingly.
Marcie, thank you so much. You've been incredibly generous with your time. Thank you, everyone, for joining us. And I also want to thank Northern Trust Asset Management for sponsoring. Marcie, this has been incredible. Thank you.
Yeah, thanks, Hank. It's so good to see you. And thank you, everyone.
Great. Folks, please join us next week at this time for our next webinar, which is The Anatomy of a Recession, What to Look For, and Where We're Headed, presented by ClearBridge Investments. Thank you, everyone. Stay safe.
Bye.